Going to also bring in, for more reaction on the oil market, Kevin Book. He's the managing director of research at Clearview Energy Partners. Kevin, great to have you on. Is the bottom in now for oil?
Well, I think it would be a bad time to assume that prices are going to keep falling when you have a war breaking out in the Middle East. Generically, that tends to be bullish.
Okay. So we were just talking about it with Pippa, but the role that Iran may or may not be playing in all of this, the fact that we had seen this potential normalization of relations between Israel and Saudi Arabia, there was an expectation perhaps that Saudi was going to reverse some of its cuts in the oil market as well. Game out for me how this could play from a supply side when we know the demand, at least right now currently, is there.
There's at least three different ways. The one you mentioned, of course, was a distant one, the possibility that normalization could bring a Saudi chapeau, or at least some leniency, answering the call when Washington rang for more supply. But more imminently, the discretionary enforcement or alleged discretionary enforcement of sanctions on Iran seems like it's going to be a lot harder. White House losing political space for that in the wake of even just tangential involvement from Iran. Second, the opportunity for this to spread, of course, could include the pressure that we bring on Iran, if we do bring pressure, that plays out in the form of attacks on regional transportation and production. So, as Pippa mentioned, the Strait, but also producing facilities, other tanker traffic in the region. And then third, there's, of course, the high-end escalation risks, attacks on Iran itself, attacks on producing sovereigns.
We're going to talk about that a little bit with our next guest, but let me ask you this. Back in 1973, during the Yom Kippur War, or in the aftermath of that, that became the time when oil embargoes and oil production freezes affected the world. Is there a possibility that we could relive that moment in time, or is the market so dynamically different today than it was then that that is not the risk it was then?
Well, the market is still susceptible to all kinds of perturbations, so I don't think we should be complacent about any of those things. History has changed a little bit. The Abraham Accords have aligned, or at least partially aligned, some of the producers who might otherwise be part of an embargo. There are questions, yes, about how the Arab Street reads a muscular Israeli attack on the Gaza Strip. And that, too, brings back some historical questions. But the other side of that, too, I think, is that when we look at the dynamism of the market, we also have producers who are funding big transition and domestic funding programs at home, probably looking at interoperability with the West, security guarantees. There's a lot of other issues here besides just talking about oil.
Yeah, and that's actually where I want to turn with you, Pippa, and that is the role that domestic players play on the global stage now, because unlike the 1970s, we're now a net exporter when it comes to some of these energy and resources. So any sort of sense on how this could play out with U.S. production, maybe even potentially being able to step in and fill the void if we see prices higher for longer? Well, for many years, we were the swing producer after the shale boom, but a lot of that has now shifted over to Saudi Arabia, and they're really the ones that can fill the gap these days, because when it comes to U.S. production, even if prices do get high enough to incentivize companies to start pumping again, shareholders don't want it. And so that really ties the hands, particularly of the major publicly traded companies. There is, of course, the question of the private names and whether or not they'll bring back production. But I think that we've seen in the last year that Saudi Arabia's influence in this global market has grown. And so perhaps the U.S. can't boost production in a way that maybe once it could. OK. Kevin, I have to ask, is $100 oil back in play here? Strategics earlier today noted that we saw $100 oil in August of 2008 when Russia attacked Georgia. We saw in February 2013 when Russia attacked Crimea, $100 oil. And it was $100 for the third time in February of 2022 when Russia attacked Ukraine. Is there a pattern here, or is there a reason to not believe that we don't get triple digits?
We're looking at a fourth quarter where demand could be ahead of supply by 1.1 million barrels per day. That would, again, take us, all things being equal, upwards rather than downwards, with geopolitical risk on top of it. Of course, $100 is a different number depending on which $100 and which dollar you're using, inflation being a factor. But it's psychologically very important.